One business quality and economic moat analysis. Chagee Holdings Limited NASDAQ. Cha operates as a premium tea drinks brand that specializes in healthy, freshly made tea beverages, positioning itself as the Oriental Starbucks in the rapidly growing tea market. Founded in 2017 by Junjie Zhang and headquartered in Shanghai, China, the company has experienced remarkable growth, spanning from 1,087 locations in 2022 to 7,038 teahouses across Greater China and international markets by June 2025. This represents a 40.9% year-over-year increase in store count, demonstrating exceptional expansion capabilities. The company's strategic focus on cultural authenticity, combined with modern consumer experiences, has enabled it to carve out a distinctive position in the competitive beverage industry. 1.1 Revenue model and business operations. Chagee generates revenue through a dual business model that balances franchising with company-owned operations. Franchise teahouses 90.7% of revenue. The primary revenue driver is contributing RMB 3,020.7 million in Q2 2025, representing 6.1% year-over-year growth. Franchisees pay initial fees and ongoing royalties based on sales. Company-owned teahouses 9.3% of revenue. Generated RMB 311.2 million in Q2 2025, showing impressive 77.3% year-over-year growth. These locations serve as flagship stores and innovation labs for new products and concepts. Merchandise sales 20 to 30% of revenue growth. An innovative revenue stream contributing significantly to growth through culturally inspired products like badges, mugs, and accessories that leverage scarcity and collectability. The company's operational footprint spans multiple markets, with 6,666 locations in Greater China and 133 in overseas markets as of June 2025. This geographic diversification provides stability while maintaining focus on the core Chinese market. 1.2 Competitive advantages, an economic moat, cultural positioning, and brand identity. Chagee has successfully integrated traditional Chinese elements with modern consumption trends, creating a unique Gofeng modern Chinese aesthetic that resonates with younger consumers. This cultural authenticity is difficult for competitors to replicate and creates strong emotional connections with customers. Streamlined product strategy. Unlike competitors who average 69 drink options, Chagee focuses on a curated selection of high-quality products, avoiding the paradox of choice that can lead to consumer decision paralysis. Their hero product, Boyajuexian Jasmine Tea Latte, has sold over 600 million cups globally, demonstrating the power of focus. Technology-enabled operations. The company's mobile mini program has amassed 206.9 million registered members, representing a 42.7% year-over-year increase. This digital ecosystem creates valuable data insights and fosters customer loyalty through personalized offers and engagement. Merchandising innovation. Chagee's extensive merchandise lineup, 40 to 50 products annually, generates 50% plus of campaign engagement and 20 to 30% of revenue growth. Their limited edition strategy creates scarcity and urgency, driving both sales and social media buzz. Scalable franchise model. The asset-light franchise approach allows for capital-efficient expansion while maintaining quality control. The company directly manages only 398 teahouses, including 229 franchised locations, ensuring consistent brand experience without the capital burden of full ownership. Table Chagee's economic moat assessment using Buffett's framework. Moat component: Chagee status assessment, brand value, strong cultural identity, and emotional connection, strong cost advantage. Scalable franchise model with operating leverage moderate. Network effects: 206.9 M members creating data advantages developing. Switching costs, loyalty program, and emotional attachment, moderate intangible assets, cultural positioning, and brand heritage strong. Despite these advantages, Chagee operates in a highly competitive market with pressure from both traditional tea shops and new entrants. To management quality assessment. Warren Buffett places immense importance on the quality and integrity of management when evaluating investment opportunities. Chagee's leadership team demonstrates several characteristics that align with Buffett's preferences. For capable and trustworthy stewards of capital, founder-led leadership with inspirational story, CEO Junjie Zhang brings a remarkable personal story and deep industry knowledge to Chagee. His background includes overcoming significant adversity, including homelessness. Before entering the tea business at age 17, Zhang's hands-on experience from working his way up in the industry provides practical knowledge that typical corporate executives might lack. His substantial ownership stake, 35.14%, worth approximately $1.09 billion, strongly aligns his interests with those of shareholders. Operational execution and strategic vision. Under Zhang's leadership since 2017, Chagee has grown from a single location to over 7,000 tea houses in just 8 years. Management has demonstrated disciplined capital allocation through a primarily franchised model that requires less capital than company-owned expansion. The leadership team has averaged tenure of 4.4 years, providing stability and institutional knowledge, transparency, and communication. Management provides detailed operational and financial disclosures, including regular updates on key metrics like store count, GMV, and membership growth. The company clearly articulates its strategy of blending traditional Chinese culture with modern consumer experiences, and has consistently executed against this vision. International expansion capability. Management has demonstrated ability to expand beyond China, with operations in Malaysia, Singapore, Thailand, and plans for entry into the North American market. This global vision shows strategic thinking beyond immediate market opportunities. However, some aspects might give Buffett pause. The board of directors has relatively little experience with the company, with an average tenure of just 0.4 years. Additionally, the company's rapid expansion has come with some operational challenges, as evidenced by declining same-store sales metrics. 3 Financial strength evaluation. Warren Buffett prioritizes companies with strong financial fundamentals, including consistent revenue growth, healthy profit margins, high returns on equity, minimal debt, and strong free cash flow generation. Chagee's financial profile presents a mixed but generally positive picture when evaluated through these lenses. 3.1 Revenue growth and profitability. Chagee has demonstrated exceptional revenue growth in recent periods. Q2 2025 revenue, RMB 3,331.9 million. 465.1 million United States dollars, representing 10.2% year-over-year growth. Total GMV growth, RMB 8,103.1 million in Q2 2025, representing 15.5% year-over-year increased store expansion. 40.9% year-over-year increase in tea houses, driving top-line growth. However, profitability has shown some concerning trends. GAAP net income, RMB 77.2 million, 10.8 million United States dollars in Q2 2025, representing an 87.7% decrease year-over-year. Non-GAAP net income, RMB 629.8 million, 87.9 million United States dollars in Q2 2025, essentially flat year-over-year. Operating margin, 3.2% in Q2 2025, down significantly from 24.6% in the same quarter last year. The disparity between GAAP and non-GAAP results is primarily due to significant share-based compensation expenses, RMB 552.5 million, related to IPO-related awards. 3.2 Return on equity and invested capital. Chagee demonstrates strong returns on equity, a key metric Buffett emphasizes. Return on equity ROE, 37.7%, industry average ROE, approximately 2.3%. This exceptional ROE indicates management's ability to generate substantial profits from shareholder equity, far exceeding industry averages and suggesting efficient capital utilization. 3.3 Debt levels and financial health. From a balance sheet perspective, Chagee appears exceptionally strong with minimal debt. Cash position, RMB 8,886.8 million, 1,240.5 million United States dollars. As of June 30th, 2025, debt levels, not specifically detailed in search results, but the strong cash position suggests conservative financial management. Liquidity. Substantial cash reserves provide flexibility for continued expansion and weather potential economic downturns. The company's asset-light franchise model contributes to its strong financial position by requiring less capital investment than company-owned expansion strategies. 3.4 Free cash flow generation, while specific free cash flow figures are not provided in the search results. The company's business model suggests strong cash generation characteristics. Franchise model. Franchise fees and royalty payments typically generate high margin, recurring cash flows, capital efficiency. The franchise approach requires less capital investment than company-owned expansion. Working capital management. Company's rapid growth suggests effective management of working capital requirements. Table. Chagee Financial Health Assessment, 2024 to 2025. Financial metrics status Buffet. Standard assessment revenue. Growth 10.2% YoQ to 2025. Consistent growth, good profit margins, 3.2% operating margin, consistently profitable concerning. Growth 37.7%, 15%, plus excellent. Debt levels. Minimal strong cash. Minimal debt, excellent cash generation, strong cash position, strong and consistent. Good for intrinsic. Value estimation. Warren Buffett focuses on intrinsic value, the discounted value of the cash that can be taken out of a business during its remaining life rather than prevailing market prices. Estimating Chagee's intrinsic value presents challenges due to its recent IPO and rapid growth trajectory. But we can utilize several approaches to gauge whether the business might be trading at a discount to its intrinsic value. 4.1 Discounted cash flow analysis. Applying a traditional DCF valuation to Chagee is challenging due to the limited financial history as a public company. However, various analyses suggest intrinsic value estimate. $44.64 per share current market price. $16.55 per share. Upside potential, 63% based on these figures. This analysis suggests significant undervaluation relative to the company's growth prospects and cash generation potential. 4.2 Growth-based valuation. Considering Chagee's exceptional growth metrics, store growth, 40.9% year-over-year, member growth 42.7% year-over-year to 206.9 million registered users. Market position. China's largest premium freshly made tea drinks brand. The company's growth rate arguably justifies premium valuation multiples compared to slower-growing beverage companies. 4.3 Analyst price targets. Wall Street analysts provide additional perspective on valuation. Average price target $26.79, low forecast. $19.19 high forecast, $33.50. Citi price target $43.70 by rating. Deutsche Bank price target $40.50 by rating. These targets suggest analysts believe the company's growth trajectory will eventually lead to improved financial performance and valuation expansion. 4.4 Valuation challenges and considerations. Valuing Chagee requires careful consideration of several unique factors. Recent IPO, limited trading history and public market scrutiny. Growth rates, sustainability, whether 40% plus growth rates can be maintained. International expansion. Success in new markets could significantly impact value. Profitability recovery, whether operating margins can recover toward historical levels. Based on the available data, Chagee appears significantly undervalued based on both DCF analyses and analyst price targets. However, the valuation discount likely reflects concerns about recent margin compression and same-store sales declines. Evaluating Chagee's long-term potential requires examining industry dynamics, competitive positioning, and various risk factors that could impact the company's ability to compound capital over the next decade. 5.1 Industry outlook and growth potential. The tea beverage market represents a substantial opportunity. Market size, RMB 818.9 billion in 2024, projected to grow to RMB 1,102.7 billion by 2028. Growth rate, 7.7% CAGR from 2024 to 2028. Global expansion. Its potential to replicate the Chinese success story in international markets. Chagee is well positioned to benefit from these trends through its strong brand identity, scalable operations, and cultural authenticity. 5.2 Competitive threats and market position. Chagee faces competition from several fronts. Traditional tea shops, local competitors with deep market knowledge, international beverage brands, global companies with substantial resources, new entrants, low barriers to entry in some segments of the market. Chagee's competitive position appears strong due to its first-mover advantage in premium tea beverages, and cultural authenticity and scale advantages. The company's ranking as number 1 in China's social influence index among tea drink brands demonstrates its market leadership. 5.3 Key risks and challenges. Several risks could impact Chagee's ability to compound capital over the long term. Same-store sales decline, minus 23.0% in Q2. 2025 raises concerns about market saturation or competitive pressures. Margin compression. Operating margin declined from 24.6% to 3.2% year-over-year in Q2 2025. Execution risk. Rapid expansion could strain operational capabilities. Cultural adaptation. Success in international markets requires adapting to local preferences. Economic sensitivity. Consumer discretionary spending could decline during economic downturns. 5.4 Capital compounding potential for Chagee to compound capital effectively over the next decade. Several conditions must be met. The company must stabilize and eventually grow same-store sales while expanding the store base. Operating margins must recover toward historical levels as share-based compensation normalizes. International expansion must be successful without diluting returns. Management must maintain disciplined capital allocation as the company matures if these conditions are met. Chagee has the potential to become a much larger business over the next 5 to 10 years. However, the uncertainty around these factors makes the company's long-term prospects less predictable than established businesses Buffett typically prefers. 6. Final verdict. Buffett-style investment suitability. Based on comprehensive analysis through Warren Buffett's investment principles, here is how Chagee Holdings measures up against each of the key criteria. A. Understandable business. Chagee operates in the beverage industry, which is generally understandable. The company's focus on tea drinks with cultural elements is straightforward to comprehend. Rating. Satisfactory. B. Consistent earnings. Chagee has demonstrated strong revenue growth, but inconsistent profitability. With significant margin compression in recent quarters, the substantial difference between GAAP and non-GAAP earnings adds complexity. Rating. Poor. C. Good. ROIC. Chagee's ROE of 37.7% far exceeds Buffett's typical threshold of 15% plus, indicating excellent capital efficiency. Rating. Excellent. D. Low debt. The company maintains a strong cash position with minimal debt, aligning well with Buffett's preference for conservatively financed companies. Rating. Excellent. E. Attractive valuation. The stock appears significantly undervalued based on DCF analysis, 63% upside, and analyst price targets. Excellent. F. Long-term moat. Chagee demonstrates several competitive advantages, including brand strength, cultural positioning, and scale. But the durability of these advantages is unproven. Rating. Moderate. 6.1 overall assessment. Chagee Holdings partially meets Warren Buffett's investment criteria but falls short on several important dimensions. While the business is understandable, generates excellent returns on equity, maintains a strong balance sheet, and appears significantly undervalued. The inconsistent earnings and uncertain durability of its competitive moat make it not ideal for a traditional Buffett-style investment. The company might be appropriate for investors with a growth-oriented perspective who are comfortable with higher risk in exchange for potential substantial returns. Buffett would likely prefer to observe Chagee for several more years until it demonstrates more consistent profitability and stronger evidence of a durable, competitive advantage before considering an investment. For those interested in the consumer sector through a Buffett lens, potentially more suitable candidates might include companies with longer track records of consistent profitability, stronger economic moats, and more predictable cash flows, though these would need to be evaluated based on their own merits against Buffett's criteria. Table. Chagee Holdings. Buffett-style investment suitability. Summary. Criterion assessment. Explanation understandable. Business. Satisfactory beverage business with cultural elements, consistent earnings, poor volatile margins, GAAP versus non-GAAP differences. Good. ROIC. Excellent. 37.7% ROE. Far exceeds 15% threshold. Low debt. Excellent. Strong cash position. Minimal debt. Attractive valuation. Excellent. 63% undervaluation based on DCF long-term. Moderate. Good advantages but durability unproven. Overall suitability. Speculative good potential but doesn't fully meet Buffett criteria.